Start recording. All right. So thanks folks for joining us. I'm Matt Willie. I'm the manager of regulatory advocacy for the League of Credit Unions and Affiliates. As a lot of you know, we have in Florida the new qualified public deposits program. And within that program, there is lots of different steps, and it's new for everybody. So what we thought we would do today is bring in some folks who have done this before and has had a couple years of working on this. And we reached out to our friends at GoWest Credit Union out in Washington, and they recommended Ben and Nathan from and I don't want to mispronounce the name of the credit union. I'm going to say Gesa.
You say it's
Um,
correct? Yes.
yeah, so Gesa Credit Union out in Richland, Washington, and they have been working on public deposits for a few years. So I'll run real quickly through what the agenda is going to look like. We'll do some introductions. I'm going to do a very brief overview of the QPD program. Most of you already know what this looks like. You're already very familiar with what's going on. And then I'm going to turn it over to our friends Ben and Nathan to because they have on the ground knowledge. Also, want to thank Kelsey Davis, who's helping me today with our compliance team. She is running point on chat and all the various technical stuff that needs to happen to keep these things rolling. So, thank you so much for that. And also, our friends at Go West. I don't know if Joe could join us today, but Joe Adamak was the one that made the connection for us, and he's likely at the Capitol lobbying today, so he was not able to join us, but he was instrumental in helping us make this happen. So thanks to everybody. And then we'll do a little bit of final thoughts and then we'll adjourn and go from there. So our hope is to get in and out of your hair in about 45 minutes and keep things rolling. So first thing I want to do, I've already introduced myself. Um, Kelsey, real quick, if you want to introduce yourself so folks know who you are.
Yeah, sure. My name is Kelsey Davis. I am the Senior Compliance Consultant and Regulatory Analyst over at the League. So I work a lot with Matt, and we look over lots of bills and different proposals that come through. And my role in that is to try to see how that's going to impact our credit unions and think of any questions you guys might have, and also communicate it back to you, as well as doing compliance support for our credit unions in our 4 states. So very brief rundown, but that is what I try to do at the league. So
Yeah, thank you, Kelsey. And then next, I wanted to let our two guests introduce themselves. Like I say, they're coming to us from Washington, so it's a little earlier in the day there for them. But hopefully, we spent a little bit of time trying to get this on the calendar, and we really appreciate it. We know how busy they are. So, Ben, if you want to introduce yourself and say hello.
Sure. My name is Ben Rutledge. I'm the Senior Vice President of Commercial Banking. I also do all the governmental affairs for GISA and work with our GoWest Association. And I've been a commercial banker for 35 years, and I've been with the credit union for about 16 years, and essentially just started their commercial banking program from ground zero, and we just been growing ever since. So
Thank you. And then Nathan, if you could kind of introduce
Sure,
yourself and tell everybody what you are, or
sure.
who you are, and what you
No,
do.
sure. I'm Nathan Terrell, and I oversee the treasury management function for the sales line here at GESA for both our commercial members and the public funds entities as well. I've been with GESA for now a little over a year and in the business for about 27 years, reflective of treasury management specifically. That being said, I also had managed the public funds arena for a very large bank for all of their West Coast, or excuse me, west of the Mississippi operations about 15 years ago. So I'm bringing with you, to you, I should say, some knowledge for whatever I can assist with today.
Yeah, thank you so much. And as you guys know, as we've talked about a little bit on email, the program in Florida is brand new. It was essentially passed last year. and then approved this the following December. So for those on the call who may not know, this was a multi-year effort. I see Mary Otwood on the call today. She's been working on this for a long time, longer than I have. But last year we had a unique opportunity. We were able to get this over the finish line, and if you aren't familiar with how the process worked, we basically attached this to a must-pass bill that the CFO had put in, called HB 989. And it was ratified and passed on the very last day of legislative session with just a few hours to go. That being said, given that it happened so quickly, there were a couple things that were put into the legislation conditions for public deposits that make the program unique. And one thing we found in researching all of this, every single state, no matter what they do with public deposits, the program is unique in one way, shape, or form or another. There's no two that are the same. They all have a little bit of idiosyncrasies. For Florida credit unions, those idiosyncrasies, those conditions are kind of on the screen for you. It's 7% of total sums within the Treasury. The Treasury is, public deposits held in the state of Florida is something like 40 to 50 billion right now. So 7% of that, and then also public deposits with state universities as well. And the other slight condition is public deposits for each institution can't surpass 10% of your total aspects of the respective institution. These are credit union kind of conditions that are very much part of like the deal that was made to get public deposits over the line. Like we like to say when we're among our friends, the hope is as you do what you do, and we know how well you guys handle public funds and how committed you are to the community and to the people you serve and your members, we believe we can get this opened up over the space of time and get you more opportunities, but we need to start somewhere, and this was a huge win for us. There's a couple additional resources we wanted to mention here. One is the Bureau of Collateral Management. It's a brand new institution I should say agency for y'all to deal with. They have been great working with us, but they are not part of OFR. They are a different part of Treasury, so it's a different staff and it's a different people that we're dealing with. If you haven't had a chance to talk to them yet, or if you need a contact, let us know. We can connect you. We have been conversing with them since the bill passed in July, and working with them on rules and making sure that there is parity between what you guys from what credit unions are applying for and what banks are applying for. We were involved every step of the way on that. 98% of your application looks the same. The 2% that doesn't look the same is because because of the limitation, or I should say the condition on state universities, you have to get basically the state university to sign a form, and that's about it. Everything else is the same, which is what we pushed for. The other thing I wanted to call out and want to let Kelsey talk a little bit about is what the league does on the compliance services side. It is a huge benefit for our credit unions. Terry Hall, who's on the call today, is our vice president on that side of the realm for the league, and they have developed a whole list of tools, and wanted Kelsey to talk a little bit about what they can provide if y'all need assistance.
Yeah, so and I'll give Terry a second too because she worked really hard on this checklist. But what we've essentially done is dug through all of the terrible state websites that nobody wants to spend time in, and taken all that information that you're going to need and put it in an easy to use checklist. So that way you have links that you may need, the different form numbers that you're going to need, anything that you could possibly need to get yourself set up and ready to roll with this QPD program. It is there at your fingertips, and easy for you to find. So I want to give Terry a second because, like I said, she worked really hard on this, and I know that this is her baby, so she may have a little more to say about it.
Well, I would just say I tried to look at it through your lens to see what you need. Quick and easy checklist seems to be a nice layout of it starts off with application, but then about halfway through, it's 2 pages, but about halfway through, then it goes, okay, now I'm approved. Now what do I need to do? What's ongoing? So your initial steps, and then your ongoing annual steps. Again, built in there are links that will take you to the websites with that particular form. So if you happened, and there's very select, I think 3 that were approved before December 9th, I just want you to know if someone happens to ask you, what did you use? What process did you go through? Just make sure they know that those application forms did have some tweaks and they are different after December 9th. Because Florida's website was very keen on saying we will not accept these particular forms anymore. So if you had pulled those prior to that time, say in the fall, then just make sure you go pull the correct ones if you're starting down the road of application. It isn't that cumbersome, but it goes through each step, and like I say, the form numbers and the link to the form to pull up, and to pass off to your operational area to carry it forward to confirm with your those opening the accounts in case there are changes to the accounts, the people on them, addresses, those sorts of things, as well as annual verification of information and sending that information to the IRS. So all that will be on the checklist. And I will say we will have a compliance bulletin going out to all Florida credit unions with a link to InfoSite's channel with these resources on it. So you could go to InfoSite, and it may not be on there till the end of next week. That's our goal, but it will be in InfoSite. You can look under accounts. We will have those under qualified public deposits. And yes, there will be state specific, of course, for Florida, but you'll be able to see that checklist. And we're working on a sample policy, if you will, because just like states are very specific on qualified public deposits, each credit union specific on if they want a separate policy, they want to integrate policy statements inside another policy, just to give you some sample language. And then it's up to you what your board wants to, how you want to tackle the whole policy process. There is not a policy that is required, is what I'm saying. But I know a lot of you want to have those policies in there, so we're going to supply you with a sample. Other than that, our compliance email address on here, any questions going forward, but hopefully by the end of next week, we will have that bulletin out and the InfoSite channel ready for you to go look and find those resources.
Yeah, but like Terry said, when y'all are going through this, if you run into any problems, we're here to help however we can. So that compliance@the-league.coop email address is a good one to put in your back pocket anyways. We try to answer within 24 hours. So if you have any questions or problems, please don't hesitate to reach out. We're happy to help.
Thank you, Kelsey. Thank you, Terry. Our compliance team does an excellent job. I like to tell people that I sort of, in my role as in the advocacy department, I'm kind of handing the baton off to them. We helped shepherd the bill through the process. We did the rule stuff, but implementation belongs in compliance because they are the experts. If I help them with that, things just get messed up. So I stay in my lane on the advocacy side. They are the experts, and encourage you to check in with them. So thank you both. And what we wanted to start with, one thing that we've encountered when going through this in the last 6 months or so, and I kept a running list of just some frequently asked questions, and we're gonna go through these, and then hopefully when this is done, it'll answer a lot of what you guys might be thinking. But we also have some time after this for questions from the audience as well. So these are 5 or 6 questions that we got a lot of that we kept and like Kelsey said, in our back pocket, to ask other folks about, to make sure that we got answers for. So Nathan and Ben are going to walk through these with us, and feel free to take notes, put questions in the chat, but we will have a chance after this to do question and answers if we have something kind of burning that we don't address. First thing first, a lot of questions we got were around operational issues. Ben or Nathan, either one of you that want to take this, what did you face when standing up your operations for the public deposits program? when you were getting it off the ground? And then the other questions we've got a lot about is staffing and how you staffed it. How many staff did you commit? Was it more than you thought, less than you thought? Those kinds of things.
I think I could take this because when we launched it back in 2018, Nathan was with a competitor regional bank that, but really getting it off the ground, some of the operational issues. I think the biggest thing for everyone to key into is two things. One, presenting the risk and understanding the risk to your board. That's I think is first and foremost. The second thing is understanding what are the state's requirements for monthly reporting, because you want to make sure that you have a very solid process in place with that aspect of it. Because the state treasurer's office has probably somebody that's dedicated to, just like in the state of Washington, it's the Public Deposit Commission is really essentially what we operate under. But there's one or two employees that we've always dealt with at the state level. So really understanding, number one, what's your board's appetite for the risk and understanding of the risk with public deposits, and secondly, making sure that you have the monthly reporting established within that the state requires. So in the state of Washington, we're required to report on a monthly basis. And the state will be very specific about the information. It's very template oriented that they want. They actually beefed up their reporting after the financial crisis, really kind of making sure that financial institutions that were acting as a public depository are actually solvent, capital ratios, asset size, all those kind of numbers now are being reported at the state level by all the participating public depositories. And so understanding what's involved with that, I think is a big aspect. As far as operationally, the credit union really relies on two things. Number one, our treasury team and their ability to service the public depositor. And secondly, our accounting department, obviously understanding, the reporting aspects of those. And then, you have to open accounts. So you have to understand what's required from an operational perspective. And it may be different than what you're used to. And so, for example, in the state of Washington, there's a statute that does not allow you to gather CIP information on the signers. So, you have to be able to understand what that risk is and how, from an operational perspective, you're going to manage through that. And a lot of times in credit unions, especially, that's very against their grain, right? What do you mean we're not going to get CIP information? That's we can't do that. So I think just some minor things like that, understanding, putting the procedures in place, and making sure you really understand your requirements the state's gonna require you for. Nathan, I don't know if you want to add anything to that, but
I think you did a good job there, Ben. One other thing I would say to consider when getting your QPD programs off the ground is it's not just an outwardly facing focus with the state treasurer's office and the internal focus to compliance. You should probably be forging strategic partnerships with your product development teams, IT operations, treasury operations, however you're structured, because there will in fact come a need for, or often I should say, a need for product development that is specific to public funds that will be outside of the realm of your retail and commercial clients, members.
Yeah, that's an excellent point. And Nathan, to that point, and to the what you're saying, one of the things we've heard from folks, not just in Washington, but other states that we've talked to when it comes to staffing the program, is they have dedicated people working on this, and they were initially surprised at how many people they had to put onto it. Do you have the same, Ben and Nathan, did you guys have the same kind of thing where it's taking more team members than we originally thought to manage the program as it grows and even when you got it off the ground?
Yeah, I mean, we've always had a dedicated treasury team, and we hired Nathan for one reason. That was to take us to a whole nother level on the treasury management side, than what I would call basically a community bank product offering on treasury. We're pushing for regional banks and competing against them. But what we did was we staffed it within our treasury team. But to Nathan's point, we also have folks that are in our IT product development side that have had to basically create products even when we got started, but also as we've evolved and as we've built up more relationships, and just the types of investments that they're wanting to make, or the reserves they're wanting to put on deposit with us have changed due to the interest rate environment changes. So yeah, you could have a dedicated public deposit team. We haven't chosen to do that per se. We also, we made it part of our commercial division along the treasury line, but with all these different offshoots, right? So, accounting, you have to have people in your accounting department that understand what's involved, IT, compliance, so we have collaboration amongst a whole bunch of different groups versus just one solid team moving forward. So,
And how many people do y'all have just so folks have a sense of like how many people do you have on on your treasury team?
Nathan, you want to?
So from on the frontline sales, Matt, we have, including, well, leadership and whatnot, we have 5 all in. But then you have the component of treasury operations, which is integral to some of the asks that will be coming your way in tandem with, for example, IT operations as well for some of the product build out that might be connected through your core.
Got it. Fantastic. And and then and just kind of going down the list here, you maybe touched on a little bit of this, Ben and Nathan. Now this might be maybe it's evolved over time. Have you discovered what's the hardest piece of kind of navigating QPD process, and what did you do to overcome it? Has it been the backside operations piece? Has it been going out and getting them, awareness, education? What has been kind of the biggest challenge y'all have faced?
So to that question, as Ben indicated earlier, he was really responsible for the build out through the QPD process, or what we call qualified public deposit process here in Washington State, which preceded my existence here. I, at a predecessor, was involved in that, and that process, although cumbersome, I would tell you that once you're through over that hurdle, the real work begins. And that is why I would encourage you to take on that inward focus with your legal compliance operations groups to ensure that everybody is in alignment on a go forward. Ben, anything you'd like to add to that?
Yeah, no, I think once you get it established, then it's just what really becomes challenging is making sure that all of the stakeholders within the credit union understand the various levels of business decisions on a daily, weekly, monthly basis that have to be made in order to properly monitor, but also, you know, this is you can treat this in different ways. A public deposit program within a credit union could be a tool that you might use for liquidity purposes, right? Well, 4 years ago, short-term monies within the state pools were very, very, very low. So they were really pushing hard on longer term CDs at much higher returns. Well, obviously, that has changed almost overnight. And so those short-term monies have become very expensive. And so we had to shift. If they wanted a short-term play, we had to shift in creating products that were variable rate focused. But what that also does is it moves you to your ALCO team or whoever you're using for balance, for your balance sheet management. Do you want to bring on those types of funds? So today's environment is very different than it was even, 4 years ago, 3, 4 years ago, because the balance sheet makeup is very different. So I think those are things that you just have to be nimble and you have to have multitudes of stakeholders within the credit union to be able to kind of navigate through that. Does that help? I mean,
I would like to add one more thing to be cognizant of on a go forward. Traditionally, QBD process has been more focused and geared in favor of the banks, not credit unions. And so that said, you will have in marketplace a natural resistance to business move from a bank to a credit union. To further that resistance, though, is a lack of understanding or knowledge, often that you will find outside of the state treasurer's office. I'll use PUDs, even very large PUDs, for example, or public school districts, universities that are candidly unaware of any shift in that regulation. And to that point, I'd like to share that we've had to go through and effectively scrub our own state treasurer's website, and we find where there are misses from several years ago when our legislation passed permitting us to expand into this arena, and working with our state treasurer's office to get their website updated to drive the message forward that credit unions can participate in this. And we have actually run into several opportunities or prospects, I should say, where there was resistance and just due to a lack of understanding or knowledge that we can in fact participate as a PDPC or QPD organization or credit union. So that's something that your front line will be effective in driving messaging. So work closely with your front line in getting the messaging out, and candidly would not hurt with your marketing teams either.
Yeah, that's like I say, astute. And this you lead right into the next kind of questions here. Have you guys had to at Gesa, have you had to switch up the portfolio a little bit as you've been going through this and as the market conditions are changing? Have you found something that's been maybe I don't know, like a best bet or something that you knew that's been most beneficial? Because it sounds like just from listening to what you're saying is it's a constant kind of changing things up to make sure you're matching kind of what you want at the credit union and what's available sort of in the pool, if that makes sense.
yeah, the environment can shift, right? From our perspective, when we first started, it was, we created a product that really could handle a certificate of deposit. It was a nice product, essentially gave a range of terms for the controller at the public entity to select from. And it wasn't just locked into here's a 24-month, here's a 12-month. It was a range, so they could pick their number of months, and we would price it accordingly. But that's now shifted with the interest rate environment being much higher on the shorter end than it was 3, 4 years ago. We are moving towards shifting our product mix and our processes to where we can actually take on a public entity as their primary financial institution. So that's kind of where we're evolving to. As you guys start to do that, to Nathan's point is making sure that you have those relationships with the types of public entities that in your marketplace that you want to be able to serve, whether it's a county, a PUD, irrigation district, whatever it might be. Then you can essentially find out what their wants and needs are, and build that relationship. It may not be the same for Mary as it is for Stephen, right, in their particular markets. So I think you got to keep that in mind. They also may require different things from you. So as a public depository, they may ask you for due diligence and say, hey, we want to know who this credit union is, how solvent are they, how financially sound are they, and they may ask you for. So you might have a due diligence package put together just so you have it readily available. That if a public entity asks you for that, then you have it ready.
Perfect. And then also to kind of not to pick on y'all, but you've been doing this for longer than us, and so we would love to get into, are there some things that you've tried that you just didn't work as they were going along? And then is there anything that you I guess that the last question we have is just like things that you wish you knew, that knew then that that you wish you things that you wish you knew then. And I guess first is just kind of thinking about what did you try that didn't work that was kind of surprising? And Nathan, if you want to start since Ben took the last one.
No, it's fine. Absolutely. So I've been in public funds arena for several years. So again, a lot of my acumen or knowledge around it preceded Gesa and the development of this what I'd call division line or line of business with our commercial bank here, or commercial banking group. That being said, I've actually gone out and developed a list of sensitivities that you should be aware of when managing expectations, internal and external, for your sales groups and your internal operations teams on a go forward. And I can go through some of those with you. We've touched on some of those today, surrounding compliance and legal concerns and collateralization. But some of the things that you should be aware of: fee sensitivity. It's significantly greater with public funds clients than it would be, for example, with a commercial client. So often you will either have to concession price your fees or develop a fee structure specific or a fee schedule specific to public funds banking altogether. So that would be one thing to consider. Another thing to consider is public funds entities really will drive home the point of service reliability. They demand high levels of reliability, especially through payroll and tax distributions. So if you are not there yet, I encourage you to put some focus on that within your organizations. That will help you to succeed in the sell of your business on a go forward. Another thing is, of course, we've touched on it briefly, which was reputation risk. Public funds entities are incredibly risk averse, and they're concerned with working with any institution that has been implicated in perhaps not upholding the public's trust or whatnot. So be aware of that when going out and trying to garner public funds business. Decision-making complexity. Often decisions, they're made at the boards or the committees. So the sales process is often much slower with public funds banking than it is with commercial banking. So to that effect, and I'm not sure what your RCW's laws or bylaws state, for example, in Florida, but in Washington, nearly any award of business has to go out meaning from an operational business perspective, not just a simple deposit placement, has to go out to an RFP. And an RFP is a very lengthy process. So you might find yourselves needing to have a beefing up of technical writing skills and an understanding of the questions being asked in those RFPs that you ingest on a go forward. The RFPs can be quite lengthy at times and sometimes not so lengthy. And they will take hours of team resources, collaboration, internal, to put together that response. There's also, of course, with any business, transition challenges, and clients could be hesitant or public funds members to switch from providers due to concerns about perhaps disruptions in their operations or employee resistance to new systems. We often overlook employee resistance And I cannot tell you enough. I would encourage you to train your sales force how to overcome resistance questions in those discussions, because that is going to be very critical for you on a go forward. And then I would say the last thing would be an ethical and legal compliance consideration. Public funds entities, they have to adhere to strict procurement and bidding rules. And any type of, I'd say, perceived conflicts of interest that can be very problematic. No offering of lunches or anything like that. They will often just flat out tell you no. And it will, just in the offer alone, knowing they'll say no, they will, they could potentially just put you on a short list of no's on a go forward. And actually, one last thing, public funds entities, word of mouth travels at lightning pace. So if you do good, you'll do great. And if you do not so good, it could be the end of the division altogether. So make sure whatever you're delivering to market, you're delivering it in what I'd say a human scalable fashion. I would not go out and offer everything that the big banks are offering that smaller credit unions are. It's difficult to achieve that in the first place. But having a very good core in place, a core product suite that is speaking to your kind of mid-tier, smaller public funds entities is probably a good starting place. They're going to have a lot of sensitivity surrounding fraud prevention mechanisms. So, for example, I saw a question posted earlier in the chat. What types of products has Gesa developed or are we developing to overcome some of that? And Ben, with your permission, I'd like to speak to that briefly here. I'm sorry if I'm talking too much. So.
No, this is great.
Okay.
I was going to say, just so folks know real quick, and
Sure.
we can move on to the Q&A part.
Sure.
Just so folks know, there is an RFP process in Florida, so you definitely will have to go through that. There are very strict ethic rules as well in Florida. So when Nathan says no lunches and things, basically the same for us. So just so you all know.
Matt, do you have do they, in Florida, like Nathan talked about RFP, but he also talked about reserve placement, right? So sometimes you'll have to bid, but it's not as intrusive as an RFP process would be. But they are just placing excess reserves. You have the ability to do that in Florida, or is it just a full out RFP?
I believe so, but I think you have to be in the program before any of that. Yeah, before any of that's available to you.
What I would say is that's where most credit unions are going to fall, right? In that excess reserve placement, the controller is just looking for places to diversify where they're placing their reserves. It's an easy way to grow these types of deposits, and you're not involved in a very in-depth RFP process. One thing I want to add really quickly is, do you have to go out and collateralize these in the state of Florida?
Yes.
So understanding what collateral requirements and really the risk around that, I think is something that we would have done differently, where we said we're going to be 100% collateralized at all times because that made our board feel good about the risk, where we really didn't need to be that way. We're really kind of ratcheting that down to around 50% collateralization. And in some cases, if we're doing reciprocating deposits, we don't have to have any collateralization because it's all insured. So.
Excellent point there, Ben. Quite excellent. And to that, I would say all the banks are actually ratcheting down that collateralization requirement in tandem. So no need to, I'd say, take on additional risk or costs that aren't necessary when force ranked against the competitors.
Yeah, and Nathan, I didn't mean to cut you off, but you were just answering about the products and the things that you guys are doing at Gesa.
Oh, well, a lot of these products, I say a lot, but one of the things that we've really put a focus on is fraud prevention. Fraud prevention is very critical, again, to public funds entities. So, for example, if you're operating with a positive pay, traditional positive pay offering, for example, you might even find in your state's bylaws that it's a requirement that your credit union has to have payee positive pay. So you might need to beef up your positive pay fraud prevention mechanism for both checks and for ACH debit blocks and filters. Additionally, MFA or multi-factor authentication is going to be a huge thing for them, and dual control. So be cognizant of that when you are building your product suite out or enhancing your product suite on the go forward. That will be, I would tell you, at least where we are, those are deal breakers, not to have that.
I think just from a simplistic product perspective, Nathan's talking about some things that really large public entity relationships require. We created an account analysis for just public deposits. So to his point, as we're adding those services, we can fee them for it, but they might be a different fee package than we would our commercial account analysis. We created obviously the certificate of deposit product suite, and then we had to actually shift and here recently and create a money market that's really tied to the Fed funds index, so that we could price those shorter term deposits that they're wanting. And so those are just some of the things from just a straight up deposit standpoint that we created initially. But
Perfect. And there's one other question that got sent to me. Are you all restricted with how you can use the public deposits? Do you use them to lend to members and businesses? Is there a restriction on for what you guys have to do in those areas at all, or how you choose to use them, I guess?
no, there's no restrictions. We use it in really two use cases. One is we use it as a liquidity tool, where we might be adding if it's the right price versus some of our other tools that we have. We might do it that way. Those are typically excess reserve placements, or we use it as a relationship building to where we'll do some of those placements with the idea that we want to be on the list when they do the next RFP, so that we then can take on that relationship and be their primary financial institution.
That's great. Those were the two questions we had come through for the Q&A. Is there anyone, Kelsey, did you see anything else?
There was just one question that came through early, and I just wanted to make sure that everybody was aware. We talked about the checklist for Florida's, compliance and where you find these documents. And we just wanted to make sure everybody understood that was going to be available next week. It'll be sent out through a compliance bulletin, and then it will also be available in the league info site. If I know most of you here have logged into InfoSite, but if for some reason you haven't or you've not created an account, the link to InfoSite is on our website, which is the-league.coop. So you can find that and create an account. There's lots of goodies on there, not just for QPD, but that state-specific QPD checklist for Florida credit unions will be available on there. We're aiming for next week.
Fantastic. We are running up on time, but I know there's a lot of folks on the call. If there's anybody that has a question, if you want to unmute or put it in the chat, I'll give you a minute. And if anybody has a specific question, we would love to hear from you.
Hi, this is Marcella from Register.
Marcella, can you speak up? We can't quite hear you.
Can you hear me better now?
I think so.
Okay. I wanted to know what specific products had to create. Was it because of the RFP that you created it to comply to a certain bid, or was it just because you thought it would be marketable with public policy?
I apologize. I did not get your question, Marcella. Matt, were you able to, or Kelsey?
Marcella, were you asking about products? It's a little hard to hear.
I'm going to another office.
Okay. I'm sorry. Yeah, I believe she was asking about products, but while she changes audio, does anybody else have a question while we're waiting?
Good afternoon. Can you guys hear me?
Yeah.
Hi, Carlos.
Good afternoon. This is Carlos Ospino, Vice President of Operations from Bright Star Credit Union. Marcela was just in her office. She's now here in my office.
Okay.
I'm going to go ahead and ask that question.
Okay.
Hi, yes, my question was in regards to the specific products you had to create. Did you create those to meet an RFP in order for your bid to be competitive? Or did you start with your regular products and those weren't working? How does that work?
So it was a bit of a culmination. And to that, Marcella, specifically, as I indicated, I've been here at Gesa a little over a year. I knew immediately coming in and some of the requirements at the state level, we would need to beef up our security, for example, or our fraud prevention, not security, forgive me. And so we started developing that out and really putting a focus on that in advance of a need ask at that time. However, we were also what I'd say responsive to a specific ask, to a product that Ben mentioned earlier in the creation of a public funds money market addressing the liquidity needs of a potential prospect at the time. So we had to do it at lightning pace and develop the product within our core through IT operations and then working through compliance and whatnot to make sure that we were doing everything correctly. It's I hope does that answer your question at all? Or
Yeah,
okay,
it does. Thank you.
great.
I
Absolutely.
think, Marcelo, what you need to keep in mind is initially when you're listed on the QPD website, right, on which, like in our state, they break it down by what banks and what credit unions. Those controllers are going to come to you and say, hey, I want to place a $5 million, CD. What kind of price can you get us? So that's where you have to work with your CFO or your treasury team to say, what kind of pricing are we going to do on these types of deposits? Really kind of just an ad hoc business decision. But to Nathan's point, when he came on, one of the things I challenged him with was we want to take on a public depository as their primary financial institution. So then he created a gap analysis of all the things we needed to put in place to take us to another level. But in that interim, we had to spin up a money market account tied to the Fed funds just so that we could take care of those needs where the controllers weren't coming to us saying, hey, we want to put a CD placement. We want something more liquid that's paying short term, that's paying, in some cases, higher rates, given our interest rate environment. So that's kind of what he's talking about as far as we had to really shift and kind of put that product in place. But initially, I think it's really understanding what the needs of what your public entities are going to be asking you for.
One more question. You talked about the core. Would you say, let's say that you have a really good checking account offering a high interest rate that many business customers like, and a public depositor would go with it. Do we have to create a different product, or is it just flagging it as a government product? How does that work?
Yeah, you could. I mean, your product mix with inside your organization is really not something that's regulated per se by the state treasurer. It's being able to flag that account, whether it's through a certain product type in your core or a user field inside your core that you can flag it and develop reporting that would identify who those public deposits, who they are, and how many do you have, and that you're meeting the reporting requirements. So you certainly could do that. But it may not meet the needs of what the public entity is asking you for.
Totally agree. Thank you.
Yep.
Good afternoon, Ben. This is Carlos, back to you. I do have one question. I know we are almost done with time here. It was recently mentioned that a policy was not required, but we also spoke about, you guys mentioned something in regards to the fees, that we may have to adjust our fees based on the type of accounts and the business demand that these public depositors are going to be asking us for specific products and things like that. As we know, we currently have consumer disclosures and business disclosures. Is there a separate disclosure type that needs to be provided to these public depositors once those accounts are open? Or could it be a public deposit session included into the business disclosures?
We use our commercial disclosures for that. Even on our digital banking platforms that we have, we use those same agreements. So now, again, you don't have to necessarily adjust your fees unless you're really going after their primary source of business, right? If you're just opening up money market accounts and CDs, things like that, your fee set's going to be a lot more simple, right? So,
yeah.
Thank you.
Thank you, everybody. I know we are over time. I promised to try to get you out of here in 45 minutes, so I apologize. If there are any additional questions, I wanted to give Nathan and Ben 1 second to give some final thoughts or anything else that they want to say. But this is their contact information. I'm sure that they're more than willing to answer an email. You may get it at like 10 o'clock at night, but that's just because they're on the West Coast. But Ben and Nathan, is there anything else? We really appreciate you spending some time with us.
go ahead, Nathan.
From additional thoughts that I would encourage you to, as particularly Marcella's questions came in, it started to occur to me, I would build database to your competitors. I would be garnering their analysis statements. When you're getting your RFPs in from these public funds, the data you will collect from that will help drive pricing and product gaps that you will become aware of. And that would be final thoughts surrounding that.
Yeah, I just add one thing to that is they do ask for how involved are you in your community, especially the community that they are in. So be prepared to provide data that says how much give back and volunteerism you're doing in that particular where that public entity is actually specifically located.
Perfect. And then just finally, if you need to contact anybody at the league, we are always here if you need us. Kelsey Christopher, who could not be on the call, he is our our senior director of government affairs, our lobbyist in Florida. He has been in the front lines and kind of on the in the trenches on this. And with the special session called today, Christopher is at the Capitol, so he could not join today. But if you have questions for him, he's available too. I hope with our regulatory advocacy can connect you to folks in what we lovingly refer to as the AB, the alphabet soup of the regulatory agency. So if you need something on that front, but in all, if you reach out to one of us, we'll find a way to help you. So that's it for today. We really appreciate it. And then again, thank you, Ben and Nathan, for your time. I know Joe's not on the phone, but when you or on the webinar, but if you see him, I'll send him a note and say thank you. But if y'all see him, Ben and Nathan, tell him thanks. So we really appreciate it. I know we went over. I hope folks are okay with that. We're excited for y'all to do this program, and we're really looking forward to seeing what credit unions can do in Florida with public deposits.
Yeah, right.
Thank you, Matt. It's a pleasure.
Thank you, guys.
Thanks, everybody.